So when we examine discrepancies between incomes in Seattle between races, we're examining area median income. This is the most common metric used to measure the distribution of wealth amongst different groups. The reason is because the area median income is effectively if you took, for example, every person in Seattle and stood them in a line from least income to most income, and then you found the person who was right in the middle, their income would dictate the median income. And the reason we don't use the average income is that if you say have 10 people and you add together all of their incomes and then you divide it by 10 to get the average, if say 9 of those people are making less than $100,000 and one of those people is making $10 million, the average is going to be above $100,000, even though most people are making below that. So one outlier can skew the whole data set. Whereas with the median, it controls for that a little bit because you would find that middle person, now granted in a group of 10, you'd have to find 2 people in the middle and split the difference. But theoretically, you'd have something more in the middle that would dictate a little closer to what the is closer to everyone else's income, and you have a better idea of what the middle is. So when you see the average median income, the area median income, you can generally tell that about half the population is below that and about half the population is above that. So when we look at that median income for different races here in Seattle, we're seeing, again, a discrepancy. If you look at the orange line representing the average overall, so that is the total amalgamation of everyone, you have this general line that was slowly decreasing and then took off in 2012 after the effects of the recession receded. Now, for non-Latino white people, this green line represents the exact same trend. This is a majority of people in Seattle, right? Because the majority of people in Seattle are white. But if we look at minority groups, particularly Latinx people and African-American people, we find that while their trends are similar to that of the whole group, they also felt the effects worse. Their line here is steeper and is significantly lower than that of white people, so significantly below average for median income amongst those groups. And there are numerous factors contributing to that. When we look at home ownership, so where people live was dictated initially by racial covenants, right? It was restricted by race. But when that was outlawed, people were allowed to live everywhere. But people still weren't choosing to live everywhere or weren't able to live everywhere because there were restrictions to the loans they would get. So although you couldn't restrict a loan based on someone's race, there was still a lot of discrepancy because to buy a house, people need to take out a loan. It's called a mortgage. If I wanted to buy a house that, say, cost $500,000, I would have to go to the bank and I would ask for a mortgage of $500,000. Now, banks like to give those out because you pay for interest. So if I got those $500,000 now, I bought a house, I can move into it, and then I start paying the bank back. If I get to live in the house while I'm paying it back, because it usually takes like 30 to 50 years to pay that back. By the time I paid it all back with interest, I might have paid, say, $700,000. So the bank has made extra money. I've got to live in the house the whole time. And the bank likes it because even if I can't pay back for some reason, they could just take the house. So mortgages, very popular forms of loans. Now, you still have to be approved for those loans. And what we find when we examine data from the past 20 years is we see that for housing loans, FHA, we see that people who are non-white are more likely to be denied those housing loans. When we look at any form of loans, so loans that people would get to buy things or to move or to start a business, those types of loans are also denied at much higher rates for people who are, in this case, Black or Hispanic, or looks like for Asians, and for white people, it's below average rate of denial, and for Hispanics and Black people, it is above average. So much more likely to be denied a loan if you are Hispanic or Black. What we see as well, coming out of the Seattle Times just this morning, was that when it comes to the discrepancy, again, between the median income for a white family and the median income for a Black family or household, the discrepancy in Seattle is actually the third largest of major cities in the US. This just came out today. The Seattle Times reporting that just behind Minneapolis and San Francisco, Seattle has the largest ratio of discrepancy, where white households are making more than, so it's 2.4 times the median Black household.